Something else that's in the news, and some of our participants noticed, like with Berkshire Hathaway here, we're seeing reports that there is a New York Stock Exchange technical issue that is impacting some stock prices, including incorrectly showing
I
Berkshire
saw that
Hathaway.
with CMG. It was like, what is going on? Because CMG had looked really good. And then on my platform, I'm
Mm,
using trading view for my intraday candles. And that last price on that is 1,047. So
yeah.
something something funny is going on with those. So just be very careful if you're placing any orders right now on any stock. I would make sure that you're using limit orders in there. Don't do market orders. And the limit order can be, above like as well. Like let's say you're
Right.
buying something at $100. You don't have to put your limit at 99 and change. You can do
Yeah.
it at 101 just
Right.
so you don't get past that. And same thing on the downside. Let's say it's trading at $100 and you want to sell it. You could put your limit at like $99 just so you don't get some weird thing.
Yeah.
This is dangerous times when the exchanges have problems, and yeah, it happens.
Yeah. So be very careful out there. That's those are some great tips for placing trades today, and also, check multiple sources. And I guess especially today, if it is a NYSE stock, be extra vigilant out there. Okay, and then just one more time, Webby, to reiterate with the technical issue with the NYSE, what traders should be thinking about today. If you're seeing CMG at 1,000 instead of 3,000, what you should be
Yeah. So
looking at.
anyone who lived through the flash crash, which I don't remember, maybe it was like May of 2010 or something like that, that you realize that crazy things in the market can happen. So you don't want to do market orders. Uh, Bill would always say market, to use market orders because the thought process there was you didn't want to be picky. If something was trading at $100, you didn't want to put a limit order in it right at $100 because maybe it only trades at 105 cents and then never looks back. So it was more that mindset of if you're going to buy something or sell something, just do it. But from a tactical standpoint, the reality is that you need to place limits just so you don't get some weird thing that ends up happening. So that means a limit order in above the market when you're buying, or below the market when you're selling, with some reasonable amount of slippage that you would be fine with based on what the market is doing. If it's acting fast, you got to give yourself a little bit more room if you want to make sure you get executed. But yeah, so again, just limit orders. I like to use TWAP's time weighted average price, not volume weighted average price. Or if you're trading size, anybody who's doing large size or institutional level trading, a percent of volume, that's a good order to do. There are lots of algos available, like on Interactive Brokers. They have a bunch that you can pick from. But I think that the TWAP is typically the best way to go.